Good morning. This is the briefing for December 22nd. The market is flashing a critical divergence signal that requires our immediate focus.
And the divergence is stark. You have gold, our classic safe haven, which has just blasted into price discovery, hitting a new all-time high. At the same time, our premier risk asset Bitcoin is just stalling. It's struggling to hold its ground below a key psychological level. Now, this isn't just random market noise, this is a signal.
So let's start with the risk asset. Bitcoin's behavior right now is a crucial leading indicator for broader risk appetite, especially as we head into this very low-volume holiday week.
Okay, on the daily chart, Bitcoin is printing a classic technical pattern that everyone needs to be aware of right now. This is not a pattern you can afford to ignore, particularly given the current market conditions.
And what's so critical here is that the reliability of this pattern increases dramatically during low liquidity periods. That is precisely what we're entering now. It's a very strong signal that the buying pressure is simply exhausted.
So these are the numbers you need to be watching. That $90,000 level, it's become a concrete wall. We've seen it rejected 3 times in the last 48 hours. But the real line in the sand, the crucial level, is $80,540. A clean break below that could trigger a very rapid, cascading decline.
Look, this isn't just a technical story. The fundamentals are absolutely confirming the bearish chart. Institutional money is pulling back. Risk capital is chasing AI stocks instead. And those thin holiday order books, well, they mean any significant selling pressure is going to have an outsized impact. It's a trap.
Now let's pivot to the other side of this story, gold. Because while Bitcoin is flashing all these warning signs, gold is signaling incredible strength in a very clear rotation of capital.
This is the number of the day, a new record high. And this isn't some marginal gain either. This is a powerful breakout, and it's signaling a pretty significant shift in global capital allocation.
You know, we're seeing 3 powerful catalysts all converging here to create this explosive move. First, the market is pricing in aggressive Fed rate cuts. Second, central banks are accelerating their buying amid geopolitical tension. And third, that technical breach of $4,380 has just opened the floodgates.
And with no historical price levels above us, gold is in what we call a blue sky breakout. It's pure price discovery mode. Think about it. There is no historical selling pressure, no defined resistance. The market is now completely free to find a new equilibrium, which, frankly, could be significantly higher.
So when we put all this data together, synthesizing what we're seeing from both assets, a very clear macro picture starts to emerge. This isn't just about 2 charts moving in opposite directions.
This divergence is not random. It reflects a deliberate, aggressive flight to safety over speculation. The market is voting with its dollars, and right now, that vote is overwhelmingly in favor of tangible, historical stores of value.
This analysis from a senior commodity strategist really just perfectly encapsulates the current market narrative. Gold's rally is about preserving wealth in an incredibly uncertain environment. Bitcoin's stall? That's about a serious lack of appetite for high-risk tech plays.
And that is the key takeaway for your portfolio strategy through the end of the year. The trend is clear, the data is unambiguous, and the market is sending us a very direct message. Position accordingly.
Disclaimer: this content is for educational purposes only and is not financial advice. Trade at your own risk.